Hello traders, welcome back to the channel. So I have another video, another banger. I have another video, and today we're going to be talking about our setup. The other setup, guys, that I showed you last time. I'm going to be talking about that setup, and I also show you how it is working. The magic. People who don't know how to identify the trend of the market, you can simply be looking out for this setup. You can just come to the charts and then only be looking out for that setup. This internet is, you are offline, the markets aren't offline. You see that thing, guys? So you can easily come to the charts and then be identifying only that setup. When you see that setup, you take it. However, your target doesn't have to go far. Why doesn't it have to go far? Because you don't know where the direction of the market is. So since you don't know the direction of the market, you don't have to take your targets far, because if you take them far, then it is going to be hard for you, or it is going to turn into a loss for you, or to be win. What would have been a win might turn into a loss. Why? Because you don't know where the market the market direction is, or where the market is heading. So you just aim to enter a few hours and you are out. Why do I say so? Because this strategy is going to give you clear entries, where you're going to put your stop losses and where you're going to put your targets. So the only targets that you're considering are those targets that the market or the setup that is going to be giving you. If you're looking to swing trade or to hold the trades for longer, then what you're going to need is to know the direction of the market. People who are scalping, you don't need to know the direction of the market. However, if you know it, it is an added advantage. So now, with that introduction, I'll go straight to the charts, because I see even the internet is back, and we start. So subscribe to the channel, guys. If you have not subscribed, be part of the community, and then I'll start our analysis. Okay, so I hope you've subscribed. So now I'll first draw for you the structure of that setup. You've heard people talk about setups in the Forex market, and you've heard some people say, if I don't see my setup, I don't enter the market. I only enter the market if I have seen my setup. And you wonder, what is that setup? What do you mean by setups? People who are doing top-down analysis, you guys don't have setups. You're trading top-down analysis with support and resistance. That is what you're doing. So you don't have setups, meaning you'll only enter the market when you see that your price is at a support level or at a resistance level, or when you see a particular chart pattern. Let's say head and shoulder, double top, double bottom, inverted head and shoulder. People who trade peanuts, people who trade wedges. Yes, but now in supply and demand, we have zones. We also add chart patterns, but also we have zones. So there's this setup here. Something like that. You see something like that? Price comes, forms a resistance here, comes back, breaks the resistance, and then uses that resistance as support. People trade support and resistance. Then breaks this high and goes up. Something like this. See? Price comes, uses this as resistance, comes back, breaks the resistance, and then uses that as support and goes up. So when it goes up, it's going to leave a demand zone here. A demand zone here. So what is your entry model? You're going to put your buy limits or buy orders here, like this, and then your stop losses are going to be slightly below that demand zone, and then your target is going to be up there at the previous high. So that is a risk reward of at least 1:2 or 1:3. That is what you're going to be getting. So this one, by the time it breaks this high, you don't need to know the overall direction of the market. You know, chances are high it is going to come back to pick orders here and then go back to this high. It can go further, but since you don't know the direction of the market, this is what would be the ideal setup. So price will likely come, drop, pick your orders, and then come back to this high. Sometimes it might even go beyond that high, but what your target should be coming back to this high. So now the same thing applies to the sell side. Price will come, use this as support, go back, break the support, use it at resistance as resistance, and then break this high going down. So what you want is to see a supply zone here, put your sell orders there. When price comes back to supply zone, it's going to be selling up to this level. Are we together? So with this one, you don't need to know the direction of the market. Just come to the chart, choose your time frame that you want, and then look out for such entries. Why I say you don't need to know the direction of the market is because you're not going to hold these trades for long. You're only targeting the previous low or the previous high. You stop there. 1:2, 1:3. End there. Look for another setup. If you want to target more than that, let's say 1:7, like this one here, 1:8, then you need to know the direction of the market. You need to be sure that the trade is going to flow within towards that direction for a long period of time. Okay, so now after that demonstration, we shall go to the charts. We shall go to the charts and see what we can do, what we can get. Okay, so this is NZD card, NZD card 4 hours time frame. I want you to tell me what you see. If you see a structure like the one I've showed you, I know you guys won't see it, but you have to train your eyes to see it. But me, I can see it. So why is it? You see, price was going up, came down, broke up here, retested it as support, and then went up. And this is a trade I took some time back. So when price came down to this area, this is a demand zone. When price came back to this demand zone, and same thing at time as resistance being used as support, price bought up to the previous high, retraced a little bit, and then broke even the high and went up. So now this is it. I'll mark this demand zone like this. Someone will say, why are you including this? Because there's a wick down here. Okay, so let me go to the line chart. You see the other thing I drew? Go up, come down, break, use this as support, and then go make a high. So when price comes back here, it's going to buy and come back to this high, which it did effectively, and then even broke the high later. So now there is a demand zone here, so you put your buy orders here like that. So the stop loss should be slightly below that. That is 13 pips to make to this high, 2.7 to make 33. This is 1:2.7. If you held on longer, it would take you to a 1:4.5, which is 61 pips if you hold on longer. However, I don't advise to hold on for long unless you typically know the trend of the direction of the market. But since the market is fragile, this is the ideal way to trade. So we have another one here. Now this is the buy side, so we have another one on the sell side. So that on the sell side, price was coming down, made a support here, went up, broke the support, used it as resistance on this candle here, and then dropped down. So what do? We mark this area here. You see that area? Oh, this thing, internet is disturbing me, guys. Like that. You see, price came, used this at support, went up, broke the support, and used it as resistance. Then after using it as resistance, price shot down, breaking this structure here and this one here, leaving a supply zone here. So you mark that supply zone like that. So with the view that when price comes back, it is going to pick your orders and take them down. Now with this one, you even had a clear target. So this is where you're going to put your stop loss slightly above the zone, and then your target is going to be the previous high, which is this was 1:1.7. However, there's a clear demand zone down, so that your target would be here. That is 1:5. Your demand zone would be down here, and so far if you did that, your target so far would be in 1:3.3, 59 pips, but your target would be down here. So now this one, if you had missed it, the best way you would get it is when you would go to one time frame or to lower time frames. Let's see, just to get it clear. You see that is the 1 hour. The 3 hour it was not clear. Come to the 2 hour. Now the 2 hour was even more clear. You see now the demand zone is the supply zone is here, but the 2 hour, I think you would miss that trade, because if you'd marked only that candle, you'd miss the trade. It's looking like a sniper entry. Let's go to the 1 hour and see if we get something clear. 1 hour, I think 1 hour you'd get, if you marked it well, you would get it if you included that candle. 4 hours is clear because 4 hours includes the whole candle. So you see, price used here as support, broke the support, turned into resistance, left there a supply zone and went down. So when price comes back here, you are selling. You are selling. Where did you put the stop loss? Up there, slightly up. And then the target should be the previous high, which is this one, 1:6, but you target here 2.5 and then go all the way down here. I know price is going to come all the way down here, so now I just have to hold, move your stop losses a slightly above break even, and you have to hold all the way down there. So same setup, guys, same setup. So we shall look out for more. We had another one on gold, so I'm going to share that one on gold. And one setup on gold. So me, I can already see it on the 4 hour. It is here. This is a hidden supply zone, but you guys can't see it. So you drop down to the lower time frame. Now it is going to be visible. You see, this is it. This is the demand, the supply zone that was left. Price came, tested, went up, broke down here. Look at the move to down here, left a supply zone here. So you enter from there, stop loss is slightly above, and then target the previous high, which is here. This is a 1 to 1.6, but you would hold on and go to, right now 1:3, 400 pips on gold, and it is still, this is a live market, it is still dropping. So where would be your target? Your target would be here, because this is a daily demand zone. However, we have a 4 hour demand zone down here, but I would prefer the daily, which is 1:3.7. Move out. You're already done. Move out. 400 pips, 450 pips. That is enough. You move out. So that is happening on gold. I don't know if you have another setup on where there's one I saw. NZDUSD? No. Did I JPY? No. Did I JPY? No. The JPY used here, demand zone. No, can't JPY. No. I think that is all. NZDUSD. NZDUSD. I think we had one on NZDUSD. Was it NZDGF? 30 minutes? No. Let me see. No. Where is it? Yeah, not that one. AUDNZD. AUD card. Guys, I don't think we have any, so those are the examples that I had. I don't think we have any. There's one that is looking like that here, but you see this one, the demand zone is not clear. This one is not one you can take. This demand zone is not a demand zone I would like to take. I want a demand zone that is organized, like very clean move away. See, this one is looking like that. Price used here as resistance, broke, I used it support and went up, breaking this structure here. So We expect that if it comes back here, we are buying. Stop loss is slightly below the zone. Mark the zone clearly. Stop loss slightly below the zone, and then we target the next high, that is 1:3. That is 1:3. But the problem is here. The demand zone is not clear. I always want to see, like you see this demand zone here. Look at the move. 1, 2, 3. 3 clean, beautiful candles. But this one, the first candle is good. The next is just choppy price action. This one I don't like it. However, it is, if you have some money to risk, you can risk, but only 1% of your account, and then target the previous high. Okay guys, so that is all for today. If you learned something from the video, kindly like the video for the algorithm, and also if you're not subscribed to the channel, subscribe and be part of the community, be part of the movement, as we are heading for prosperity in our trading journey. Be part of the movement, guys. Subscribe to the channel. We're on the road to 300 subscribers. Okay, boss, that is all for today. Bye.